The swing resilient strategy allows to invest in financial assets in a secure way. How does it work? First, let's look at two fundamental principles regarding the financial markets. Number 1. In the long term, the stock market is always moving up. Here is the S&P 500 index chart. From 1950 to 2024. The index tracks the stock performance of 500 of the largest companies listed on stock exchanges in the United States. We can see the dot-com bubble market crash in 2000, then the subprime crisis in 2008, and lately the COVID crisis at the end of 2019. As you can notice, the general trend is always moving up. Number 2, stock prices very often move in channel patterns, with uptrends and downtrends. The swing resilient strategy consists of buying at the bottom of the channels and selling at the top on multiple resilient stocks. Here is an example. Let's say that you have $3,000 that you want to invest in stocks. We will split the capital into 3 resilient stocks: Pepsi, Amazon, and Apple. On Pepsi, we can see that the stock is tagged as resilient by the Just Traded AI system. The win rate is high, and the current AI model is evaluated to have an 8 out of 10 chance of getting a positive return. The average return on investment for each trade is at 9.61%. For the case of this example, let's say you bought $1,000 worth of Pepsi shares at the buy signal on June 14, 2022. This trade has been positive since the trend is upward following the buy signal, allowing you to take profits at the next sell signal. For Amazon, we can see that the stock is also tagged as resilient by the Just Traded AI system. The win rate is high, and the current AI model is evaluated to have an 8.3 out of 10 chance of getting a positive return. The average return on investment for each trade is at 26.6%. You also bought $1,000 worth of Amazon shares at the buy signal on June 14, 2022. Again, the trade has been positive since the trend is upward following the buy signal, allowing you to take profits at the next sell signal. Then, after the 2 positive trades done on Pepsi and Amazon, you decide to invest in Apple. Apple is also tagged as resilient. His win rate is evaluated as good, with a 7 out of 10 chance of getting a positive return. The average return on investment for each trade is at 18.9%. You decide to buy $1,000 worth of Apple shares at the buy signal on September 27, 2022. However, this time, the trade isn't positive in the short term because the trend is downward following the buy signal. This is where investing in resilient stocks is crucial. Since Apple is resilient, there's a high probability that the trend will be upward in the mid to long term, mirroring the S&P 500 index trend. This means that you'll just need to wait longer to achieve a positive return. While waiting for your Apple trade to turn profitable, you can continue investing the other portion of your capital used in Pepsi and Amazon. Then, when the right sell signal comes, you can sell your Apple shares and use the proceeds for another trade. To learn more about the swing resilient strategy and how to find resilient stocks, visit justtradeit.co. Thank you for listening.